Alright guys, welcome back to another video. Well, it's no surprise by now, Bitcoin is crashing. It's down 12% from the all-time high, but more importantly for most, altcoins are actually crashing. They're down quite significantly from their current tops, and some are even breaking down through previous significant support zones. Now on the Bitcoin chart here, we do have 2 days down. And if you've been following the channel now for over 12 months, you remember we had the 3-day rule back here in the March top, which happened and led the market down underneath that old all-time high for nearly 8 months. So this is going to be on high alert now for the next 24 hours, whether we do get this 3rd day down. But I want to try and give just a little bit of hopium, both sides to the market. But I guess more importantly, I don't want to lead anyone astray. No one knows what is happening in the market. Of course, yep, that's the idea. No one knows. People on YouTube, all that sort of stuff. We hear it all the time. So I think it's really important to understand what your risk and reward parameters are and what type of trader you are going forward. Are you going to be an absolute degenerate, buy all the dips and maybe come out on top with millions and millions of dollars? Or do you play it a little bit safer? That's the idea with the analysis in today's video. It's your home of macro cycle analysis. I'm going to cover Bitcoin, cryptos, but also the stock markets as we come into the end of the year. And many of these markets are up a lot with a couple of days down. So there is some, I guess, good news to the bad news here. Hit the like button, subscribe to the channel. I'm not going to sugarcoat anything in today's video, nor do I ever sugarcoat it, which is what I know you come here for. This is what you come to the channel for, the non-sugar-coated data and charts. Links in the video description for our Christmas sale. And there's actually 24 hours to go. That's for TIA Premium. And you've got our channel sponsors here, crypto debit cards with Bybit, Bluffin no KYC, and also CoinCatch there. But now we have an absolutely mammoth video coming up. And as I said in the title, this particular pattern happened 7 years ago for BTC. We're looking at the dates here. You've got the date of the 17th of December, all-time high, $108,000. Can you believe it? That 7 years ago to the day, Bitcoin also hit its all-time high, $19,900 before going on 3 red days down, followed by an inside, followed by another mega day down. That was the all-time high at the time, and it didn't come back for at least another couple of years after that point. Is that going to happen again? Obviously, no one has the answer to that. No one has that crystal ball, but I think it's important to have a look at these timeframes and the dates that have shown up throughout this cycle, which are very similar to last cycle. So a lot of similarities with these tops and turning points, something we need to discuss in further detail, starting with the macro cycle. Let's take a quick look at the agenda here. Yesterday, I looked at something where I've changed my position for the first time in history. I trade, I invest full time. I will change my position, and if people don't like it, that's their problem. You have to understand what it is you're doing in the markets, whether you are long-term, whether you're short-term, and what changing position means to you. The main thing I looked at here was where we're going in the cycle for the real estate and economic cycle and the stock markets. I still see further upside for the time being. However, there are very significant signs that major cracks are showing. Some would say that happened in 22 and 2023. I beg to differ. Now we're starting to see them at the end of 24, basically into 2025, which is part of the winner's curse phase, which is part of the market running up into this final peak, wherever that may be. And of course, I don't have a crystal ball, but I look at my risk and reward parameters, and the risk at the bottoms in 2022 and 2023 was way lower than the market expected. People think the bottoms are the risky times to be getting into markets, these lows back here, like it was for Bitcoin and cryptos and so on. But the lows are the least risky. The tops are the most risky. And I have said many times before, I think the tops are the hardest part to trade because you don't have any analysis to work off. You're basically just running into fresh all-time highs. Emotions get very crazy, and you can see it from comment sections. So pay attention to that, see what people are doing and saying and feeling at the times, and then hopefully use that to your advantage, right? So the lows, I've maintained that they're the easier times to get in when you get that extreme fear, but at the highs, I think they're just much difficult. You might be different to me and you might be able to do this game way better. So good luck to you. The next thing is Powell and what he was saying yesterday. The economy is strong. So I think this is borrowed time. Again, it goes back to the same point. My position is I don't know if there's much time left. As I've said, I'm looking at the short term within the next 6 months, maybe the longer term within sort of 18 months, which would take us out into 2026. But at the same token, the borrowed time piece, that is not a lot of time considering where we have come from in the cycle. You got 14 years up, 4 down, roughly speaking. So 6 months to 18 months to me is a short period of time. For many others, they're trying to get rich in a month or two, right? But there's a difference in traders here. So you take from it what you will. Now, the S&P and the stock markets, yesterday had the biggest crash, daily crash for the S&P 500 since the March 2020 crash. And I don't know if we can say what that is yet. I don't know if YouTube blocks us for calling the flu what it was, but nonetheless, March 2020 is the time when we had the big day down. So that was the biggest days we saw. Now, what I want to look at here are some of these signs going into this peak. You know, your 18-year US real estate cycle and economic cycle into this peak, wherever that may be. And in terms of the first half of 2025, I don't know how much clearer I can make that as I'm explaining the words to you here. First half of 2025 might be trickier than anticipated. Reason being is the moves to the upside already. I'm looking at a quarterly chart. We've got about 12 days to go to finish out the quarter 4 of 2024. And just looking at the percentages up here, you're at nearly 50% up on this swing. If we go low to high, 49.26. But I know many people, they sort of measure it from the open to the close. That's about 36. But we're looking at swings here. That's part of the analysis. You're at 4 quarters, 4.5 quarters essentially, if you look at this outside bar. But essentially 4 quarters in that swing. You had 1 quarter down and then 3 quarters up. So we can look at the statistics using the GAN Swing Pro, go into your settings and then turn it on down here in swing statistics. Basically, I'm just looking at the average, the median, the maxes, just going back to roughly around 2015, and then we can add the rest in later. The percentage upswing average is about 43%. The median is about 40%. You got a maximum here about 121. So this is pretty much the outlier, the one running from 2020 to 2021. And just taking the averages, the medians, we're basically around that point now. 43%, 3 3/4. But say we go a little further, well, you've got 7 quarters. It still did less in terms of a percentage. You've got 5 quarters. It did less in terms of a percentage here. And another 5 quarters, about another 30% higher than where we are. But remember, that came out of a very significant low, the GFC low. So when you get those bounces out of lows, typically you get higher percentages. Just like the very big correction in 2020, huge boom into 2021, 2022. So if we just take it at face value, looking at the statistics and the probabilities, maybe we have a rocky road for the next quarter or two. And then when you go back, where I'm getting that 1 to 2 quarters is the downtrends here. You can see 1 quarter, 1 quarter, 1 quarter. This one says 0 because within the same quarter you had a top and a bottom, and then it basically reversed from there. And you had 2 quarters, 1 quarter, obviously 5, that was the GFC, and 3 here and 3 here from the 2022 crash. So 1 to 2, we could extend it out to 3, and that would be almost the entirety of 2025 as a correction. Now, I'm not saying that whatsoever. We're just looking at the numbers here. You have the median, you have the average, 1 to 2. The maximum there says 6. You have to take it all the way back somewhere in history. There it is right there, back in 2021. So 1 to 2. What if that's the case for the stock markets? S&P 500, I assume NASDAQ would potentially follow at that point. You know, you've got the average here, median 1, and the average at, call it 2 downswings. Then that could be a bit of a rocky start for all of the markets into 2025. And I don't think Bitcoin and cryptos would get out of that. If these are going to go down, or they're going to pause, or there's going to be something going on, then Bitcoin and cryptos are going to get hit as well. And they'll probably get hit harder. That's if this actually happens. I'm just a trader investor, and I'm trying to prepare for both scenarios. The invalidation, of course, is if we hold key support levels, and then the markets, S&P 500, the Dow Jones, they continue to to grind higher or go higher in a big way. You've got healthy correction levels and then invalidations. And right now, my significant invalidation to this is underneath 5,100 points. You got the low back in April at 49.60 and then the August low at 51.20. So that would be a key area. If those two areas broke down, then you could say, all right, the cycle was over at the top. That's the invalidation. And for long-term cycles, you need to look for long-term support levels to break down. It can't be just smaller levels that break down that give you a longer-term signal. They could suggest that things are getting weaker, and we might even see that earlier on. But you need the larger support levels to break in order to get the longer term, the larger changes in trend. Hopefully it doesn't sound too grim. It's essentially just the way I look at the markets. And yes, we got the breakdown. We had the pop up, the pop down. We can see the support, the healthy corrections to the downside, and then we can also see where the unhealthy corrections are. Basically the invalidation or the change in trend to the macro bull market to the upside. MicroStrategy is down 40% from the November top, and Bitcoin's down just over 10%. We saw it around 12%, right? So obviously much higher volatility in trading MicroStrategy. Michael Saylor's company that's basically bought up a ton of Bitcoin and plans to do a lot more. And you can see that on yesterday's bar, it touched almost dead on, or closed just above it too, the 50% level. So this is the significant 50% level from that August low to the current top, that top in November. So while Bitcoin was putting in new highs, MicroStrategy was putting in new lower highs and has now broken those lows that I said to watch out for in the previous videos over the last 3 days. It was not able to break past $450 and is on the verge of going even lower, breaking past these lows here. And I'm not saying the cycle is over. I know it sounds a little bit dire, but just keep watching this chart as a possibility of signs that you're starting to see less interest from retail, maybe for the time being, and we go up further in the next month, 3 months, 6 months, who knows, right? But we're just watching for whether we're seeing strength come in, more, interest, or we're seeing weakness. That's all we can do in the charts here. And look what happened last cycle, 2021. So 3 years ago, you had 3.5 years ago, February top, but Bitcoin went higher. You had an April lower high, but Bitcoin went higher and hit 65,000. And then November was basically equal with April. Bitcoin went slightly higher again at 69, but you had all these lower tops forming from that February top, and then it basically came crashing down. At the moment, I hope things change. Everyone wants the best case scenario. They just want to go long and become billionaires just by picking one stock and never doing another day of work in their life. But at the moment, should this break down, it's looking like a similar-ish scenario to last time. The saving grace here is if it holds your 50% level at $280, and at worst case, back at these previous highs before the market took off, those highs are around $180. So you've got 2 or 3 significant levels now, 320, 280, and worst case scenario to hold is around $180 in order for MicroStrategy to keep going higher. And hopefully it's not a precursor to the next 3, 6, 12 months for BTC. That's what I'm looking at here with the winner's curse phase. This is an absolutely crazy long video, but that's the game at this point in time. Part of this cycle top here, first time in history, change of position in power. The economy is strong, is that when we hear these quotes from, I guess, call them people in power, whether it's Musk, whether it's Trump, whether it's Powell, it could be positive of the market or negative of the market, whether that's the S&P, whether it's the economy, whether it's, in the case of Musk in 2021 was DOGE. We saw a top. Musk, he thought there was a recession in 2022. Absolutely wrong at that time as well. And obviously the markets went up from that point. Trump, S&P 500 top. He said we had the strongest economy ever at one of the meetings they have in January or February that you have in the US, right? And after that, you had the COVID collapse. So I'm not saying that this is the top, but I think that we're on borrowed time now. There are several signals that keep popping up like this. And I think it's prudent to understand your risk and reward in the markets at this time. I think there's potentially still more time that we're seeing to the upside, but it's starting to get a little bit shakier at these tops as we're getting further and further away from the foundation. You know, you've got the skyscraper in the wind, and it's much more shaky at the top than it is at the foundations. Okay, long intro discussing the markets, but I think it's important to get that out, especially with where we sit these couple of days down. The Fear and Greed Index not showing any signs of cracking here yet. 74 on the greed. It's just leveling out. The liquidations, however, have hit $1 billion. So that could be a good sign, as I said in the intro. We do have some good news here, especially when we look at the market sentiment. We've got $1 billion of liquidation. Last times we saw this, we saw some lows, not necessarily the final lows, but we've had higher lows. That was the $1 billion there on the 5th. And then on the 9th, that was the $1.7 billion of liquidations. So we've just got another $1 billion of liquidations today. Is this going to hold and continue to put us at higher lows? Ideally, yes. We do have a slight increase in volume and a lower close and a close under the 50% level. So if we were to see further downside from here, you've got roughly around that $93,000 level for support, which would then take out the $1.7 billion liquidation day, and then further down around that sort of 88,000 to 89,000, which is the next swing low. Following that, the swing charts take us back to, again, around 87, because that's the 50% level from November. And the very worst case scenario, back to the August low, so this entire range, 50% comes out at $78,700. So just call it a touch under $80,000. But on the flip side to all of this, if you take a measured move from the top down to the low, or the furthest point here is roughly around 27% from that top. So looking over the entire cycle, it's still not the largest drawdown that we've seen. We've seen 33% from March down to the August low, of course. And throughout the 2022-2023 move up into March 2024, these are roughly 20, 22%, another 20 odd percent there as well. So it's sort of still within that ballpark. It could do something crazy like that. That would definitely, in my experience, freak out the market. It'd freak me out. Okay, I'm no different to anyone else. I've got emotions. I just try to stay as safe as possible in the market, looking at the risk reward going on here. In that case, you're going to see altcoins get absolutely obliterated, which means, are you prepared for that? And if they don't go down that far, but you decide to get out here, are you okay with them going up? Do you have a plan to get back into those positions? Yes, it would be at a higher price, but you got to weigh up that risk to the downside as well, because, well, yeah, you can follow anyone that just says altcoins are only going up, buy the dip, buy the dip, buy the dip. Of course, entirely up to you how you play the game. I don't like that strategy because it doesn't sound like a strategy to me. Other people are different and they just play that sort of game. So that's the daily here. Now, I've also said this particular top is exactly the same pattern as 7 years ago. Well, basically the dates are exactly the same as 7 years ago. 17th of December, 2024, you have an all-time high on Bitcoin, $108,000. Let's go back 7 years ago. And normally I'm not looking for the exact date, but in this case, the 17th of December on a Sunday was the all-time high for Bitcoin at nearly $20,000 before it got absolutely obliterated to the downside. 1, 2, 3 red days. So there's your 3-day down signal on the back of that top as well. And it kept going from that point. I'm not saying that this is the end, even if that occurred. We've seen 3 days down before and the market recover from that. It just takes a fair bit of time because you're seeing a lot more weakness come into it from these tops. So we've got a 24-hour period to see whether this can at least hold here for an inside day, maybe a larger inside day where we get a reversal, and looking forward to a higher close if that's the case there, and ideally above 101. That would be a very good sign of strength. If you can get a close today above 101, even if the market came back down, that would still be enough sign, at least in the short term, to suggest that buyers are really finding this as a good support level to step back in and support the price and get it back to 101. Doesn't mean we have to shoot up to all-time highs. Ideally, we sort of just consolidate sideways before we get going again. But I think it's important to have those levels in mind, especially that 3-day rule, which has helped us out so significantly throughout this entire cycle, checking it in March for that day down, and then not getting too shaken out through this entire period. The weekly chart is also suggesting a local top in play. The 2-pump 4 grind 2-pump has now turned into a 2-pump 5 grind, and doesn't seem like we're going to get that pump after all. The good news here is we've got the volume dropping off for the week around these highs, and the last 3 weeks prior to this week have also been relatively low compared to the first 4 weeks of the move out towards that new all-time high. So even if it does drop into those levels that we just looked at for Bitcoin on the daily chart, you're still going back within the higher volume areas. So that could hold up the price at the support levels that we were looking at, which then allows it to consolidate and move higher. The invalidation to this, you have to know those. A close below 50% is not great at all. Anything under that 78K, not great at all, but closer to the market, anything under 87.5, so call it under $87, it's not going to be very good for Bitcoin over that first sort of quarter or so of 2025, the first quarter of 2025, which essentially lines up with what we're looking at in the stock markets, of course. You know, if this is going to be a longer drawn out correction, that could also play on Bitcoin's correction here as well. It's still early days. That's the problem. People want to know exactly what's going to happen tomorrow, and you should have known this yesterday, but the market doesn't give you tomorrow's information today, and it gives you yesterday's information today, and you got to make an assessment on what you see in the charts today. So the way you do that, if you think it's got further to go, well, you take some risk off the table and you wait. If you think it's just a temporary thing, maybe you put some more in and you wait for it to go higher. That's the only thing you can really do in these markets, and anything else is pretty much just a bit of a gamble, in my opinion. This was the toughest chart that Bitcoin and cryptos needed to break through, and it's your USDT dominance. The dominance has closed above 4.2%, and it did it at 4.29. So it's back into that zone where you would expect further downside for Bitcoin and cryptos. It doesn't mean the cycle is over. This was the same area that we were watching back in 2021. That's the data for 2021, and you could see these higher lows begin to form on the dominance chart while the crypto market was still increasing, but Bitcoin was basically plateauing at $60,000 to $65,000. And this took roughly 4 months to play out, whereas this time round, we're sort of into that 1 month, 11th of November, where we dropped into it, now at the 19th of December. So just over a month in this particular period. So maybe we do come up, test the lows again, gets everyone excited, and then sort of bounces around. The same pattern that we've been watching now is continuing on. The message here is to be prudent. Unless we get a clear breakdown of 3.8%, assume that this is a grind at potentially high prices before you see a further correction for Bitcoin and cryptocurrencies. That's just going straight off the chart and what we have seen in previous cycles. There it is there. 2021 took some time, but eventually you got that pretty significant move to the downside. Another chart we watch is the total cryptocurrency market cap. This one excludes Bitcoin, ETH, and stablecoins, which makes it, I guess, the true altcoin market cap. The 50% still at 700 billion, hasn't broken down from that. And the worst case scenario is a break back under $640 billion, which was the previous tipping point. We saw that, and basically the market's rocketed out of 650, getting very close to $1 trillion. So if we find ourselves falling back under those levels, it's pretty much a slow grind. That's what happened last time. It's what happens before. It's just part of that pattern, that once you get that grind under those levels, the levels that were previously seen as quite bullish, then it's just a matter of time how long that grind goes on for until you start to see movement back to the other side, back to the upside, that is. ETH BTC is also giving troubles to the market. You can see back in 2020, there's the November bar, green one reversal, nice high volume, December red, lower volume, and then you get this nice big move out in January. So we do have some very significant volume, at least on the Binance chart here, ETH versus BTC, that happened in November, got a bounce. But again, it still has not broken past at least the 4% level, and the major level that I'm watching for an overbalance in price here is 0.046. That's going to give us an overbalance in price to the upside, and ideally if this low isn't taken out, it'll be overbalance in time as well. And that would be that major altcoin signal when everyone has that extreme greed, the excitement, and the belief that these markets are just not going to come back down. We're still not there yet. So I don't think it's too crazy to think that we'd see further, at least consolidation. But until that happens, you're probably not going to get that same extreme excitement to the upside. The good news, got to keep bringing up the good news, otherwise people get very, very upset, is that it's similar to what happened in December of 2020. And what followed December 2020 is your massive January bar. Big volume, big reversal here. And I guess what people would be thinking is now's the time to get shaken out of all these positions and the market's just going to turn around the next month and go without you. That is still definitely possible just based on what we're seeing from the previous cycle. And you want to see that volume profile act rather similarly to last time. You get this sort of lower volume, which means even though you're getting this sell-off, there's less people selling. And then ideally earlier in the month, in that January, so we have a look back to 2020, January 2020, you start to see that volume really pick up early on and just come back out of nowhere. You can see the 27th started to pick up, and then the 3rd of January, nice big move. 3rd and 4th starts to break those tops and then consolidate above those support levels. You can see they're around 3%, and then it started to move again. Sure, it came back down, but that gives you the overbalance that you're looking for, meaning more buyers for a longer period of time, and they're holding the price up. That's exactly what we need to see, and we haven't seen it yet with the ETH BTC chart. ETH USD doesn't look fantastic, which is probably why the ETH BTC chart is still going down. I think most people can pick up the sign of a double top or at least a triple top forming here with the lower lows in between. So not the greatest sign there. The price targets that we're looking at in yesterday's video, and I didn't even know if it could make it there in a day, we're almost there within that one day, was around $3,200. You had $3,250 and $3,220. So that's a price target to the downside off your double top, just using your extensions down to 150%. So a pretty strong move so far. The flip side to this, the positive, I would say, is that we're seeing a lot of fear out online, say on X and on YouTube, while we're seeing down days. What we need to see is a reversal now. So when you see that sort of fear from people in the way they're talking about the market, how it's over and come back in 4 years or whatever they say, that's often a pretty good first signal to suggest that there's a fair bit of selling still going on, and that fear is there, as opposed to people just believing that it's this time is different and we're just going to keep shooting straight up. So it's like that fear on the lows that come in, and you see it often, like we saw for August this year. You had that extreme fear in August 05, or the 5th of August this year. Very, very extreme fear, and basically the market put in a higher low and then started to run up from there. It took months, but it eventually happened. Now for Ethereum and the downside, the major 50% here. So we've seen what happens on these smaller double tops, looking at for 150%, it's almost reached that target. Here is the larger double top. That's your level here, top to bottom, back to the top. It's hit it dead on that $4,100. 50% of that extension's at $3,126. So that's the next level to watch for support for the bulls. The bears, they would want to see, anyone shorting this, want to see it break down from 3,100 rather quickly. And that would probably take you back down and test that $2,000, that 2,100 low, somewhere around that point there, 21 to 2,400. That's if this 31 gets taken out. Now, I know this video has gone on forever, but hopefully you're getting a lot from it. If you are, hit the like button, subscribe to the channel if you've made it past whatever this is, 30, 35 minute, 40 minute video. I've got Solana and a couple of meme coins to have a quick look at. Sol has broken down from the 50% levels. You still have 3 days to go on the close, but it doesn't seem likely, unless we've got a big bounce today, that it's going to close back above 210. That's the key area now, breaking and closing above 210. Otherwise, Sol is in trouble. You can look further down. The next troubled level is a close below $190, currently sitting at $195. It's back underneath that previous top of March and really not doing too much from this point. Now, in terms of the memes, it was the big hype. A lot of these are breaking down, so watch the lows. If they're breaking down from the lows, that's going to be important moving forward. You had Brett there, Apu's breaking 50%, Dog double topped, hasn't broken down from the 50% yet. Giga double top, it's broken past the 50%, but the lows are still in for now. These are those very high risk plays that if you were thinking this is the greatest time, everyone's saying buy the dip, that's up to you. Just look to the downside. This is how you assess it. The risk to the next lows, roughly 30, 40, 80% to the lows. That's the sort of swings that you got to be prepared for should you be buying the dips today. If it keeps going, the risk gets smaller, so therefore it might be a better return or a better risk reward to the upside. MOG breaking down, but not as bad. You can throw your 50% level on here to the high, sitting on 50% at the moment on those previous tops. Ideally, consolidation would happen there. Still at those highs for now. Popcat breaking down past 50%. You can see what happened. It broke the 50%. It kept coming down. Sigma has been coming down for a long time. Could be getting ready to consolidate. And as we're looking at maybe over this sort of Q1, Q2 area, USA still coming down. SPX, lower swing top, looks like it has formed now on the weekly. And if that does break down, then you just got to measure here. How much further? That's about a 34% to that low, which would give you the signal, get out. And you've got a fair bit of ground in between there. Anything from 40 down to 80-ish%. But don't take your eyes off them. If this is that period where things consolidate again for another period of time, maybe shorter than 8 months, you don't want to be leaving the market again to come back and maybe see the things higher and think, why didn't I just watch it for that period of time? That's a look at all of those meme coins that were basically going crazy on X and YouTube and people looking for Murad's tokens. You can see how things have basically not really been going crazy since October, since it was released in that September-October period of 2024. It's basically been a distribution pattern on many of those coins. But should we go quiet for this month, 2, 3 months into that quarter, as I was looking at with the macro cycle, then it's that period that you don't want to be leaving the market, basically not watching your content or watching your charts, more importantly, devising your plans from that point, because it's those quiet times where the millions are made. If you manage to make it through that mammoth video, drop a Christmas tree emoji in the comment section. I'll do my best to get back to you. Hit the like button, subscribe to the channel. Thanks again for joining me on another mega video, and I'll see you back here if the market crashes on the weekend. Otherwise, early next week. Merry Christmas.